Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, June 15th, 2010. This morning we're talking about Greek junk. Now yesterday Moody's ratings agency cut Greece's credit rating from investment grade to junk, citing the economic risks that Greece is facing. Just take a quick look here on the chart. I'm looking at a 30-minute chart. You can see this occurred right around 11 o'clock yesterday as the euro was on pace to break 123 here, which is a little bit of psychological resistance. So you can see when that downgrade occurred, the euro sold off a little bit, but now it actually looks like it's a little bit higher. So the defenders of the euro are saying, hey, you know what, this news is already baked in. We know all about this. Things have improved since the data Moody's has used to formulate this opinion. So the euro is actually kind of shaking off this news, and it's trading higher this morning, despite what some would think would be heightened risk in the market. So looks like the euro's dodging a bullet for now. Let's just take a quick peek here. Let's go down to the, we can look at this on the 15-minute chart. Last 2 days. Yeah, you can see right here. We also had overnight German business sentiment came out, and it came in way worse than expected. So, I mean, you know, a lot of people would be thinking, hey, you know, this is bad for the euro, but apparently not. And reasons are that we're seeing good gains in the stock markets, and you know, the stocks are higher. So this is sort of a risk-taking day. But what we're seeing here is that we actually have some of the commodity currencies lower. Just take a quick peek at the Aussie here. It's actually flat versus USD, but it's down. Okay, overnight their minutes meetings from their policy meeting came out, and the RBA's basically saying that they have some flexibility to not continue with rate hikes as they sort of let this European debt crisis pan out. They also said in what some would think is a little bit counterintuitive that they would actually welcome a slowdown in Chinese growth, which would allow them to have more moderate growth as well, as opposed to on this breakneck speed that China's sort of pushing them at and causing bubbles over there in Australia. So that's what we're seeing there. We've also got the Kiwi is lower, although it looks like it's bounced back against USD here a little bit. To show you. Overnight, they had their housing prices came out, and they were still lower. So this has been on a 4-day hike here versus dollar, and as you can see, it's trading lower because this may give the RBNZ reason to pause rate hikes. Okay, but we're seeing that the actual loonie is benefiting from this as well. Okay, the loonie's higher this morning. We've got higher oil prices. I think we're up about 75. And also, corporations are diversifying away from the euro, so they're now starting to issue bonds in other currencies. And the loonie and Canada is one of the destinations that this is taking place in. So that's actually driving demand for the loonie, as well as correlation with the higher oil prices. So we're seeing some risk taking this morning. Stock indices are higher, but we've got this Aussie and Kiwi weakness. So that's kind of what we're seeing here today. Now, we just talked about the euro. Let's talk about the pound very quickly. Okay, the pound is actually a little bit mixed today. Okay, CPI figures came in a little bit less than expected at 3.4%. All right, but they're also showing that this is at the higher end of the government target range, which is 3%. Now, economists are saying, well, that's going to come down a little bit, probably mid-year. But what we have, though, is that housing prices came in, and they're showing that housing demand is the highest since January. So a little bit of a mixed reading here. You got a lot of guys saying that there's no inflation, but I think the market may think better of that. So that's kind of what we're seeing. Dollar's weak today. Check it out here versus yen. Yen's actually showing some strength today. Okay, they had their policy meeting last night. They didn't change interest rates, okay, but they are providing a $33 billion stimulus to encourage business lending. Okay, now what we're seeing with yen is that perhaps there's not so much a demand for carry trades because people are fearful that interest rates may not be going up in Australia and New Zealand. So yen's getting a little bit of a bid here from that. So today's sort of an odd day. We've got currencies are trading more on their fundamentals, not on the overall risk, and that's going to happen from time to time when market conditions begin to normalize. And as market conditions begin to normalize, that takes time for this to happen. But as we can get through each trading day without some sort of Eurozone problem, the markets will become more normal. And a lot of people were thinking that this downgrade of Greece would actually, cause risk aversion and a heightened sense of risk. But I think the market now has gotten to the point where they actually want to see something happen and not all of this ancillary news and outside reports and things of that nature. So, it's kind of like the game of show and tell. Everybody's telling us everything, but they're not showing us anything. So, you want to trade what you see and not what people want you to believe. So that's what we've got for today. Keep an eye on these markets to see if any of these things revert back to their normal correlations. And good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.